Alright, so today we're going to be doing talk about analysis on Australian dollar, Canadian dollar, starting from 1 month time frame. And as usual, we'll start by identifying our zones, which are higher level support levels, higher level resistance levels, higher level resistance to support and the likes, as well as our higher level trend lines. So, just off the top here, I can already draw a trend line right here. Let's make it black, and this is our monthly trend line. Followed by that, let's identify our monthly zones. Let's identify our monthly zones. That's one monthly zone. We actually have another zone here. This level actually acts as resistance and then comes back around to act as support. Let's move it a bit close. Yeah, this seems to fit better. So this is another monthly zone. Why did I whistle just now? Well, why not? It seems to be a zone here, but price has moved through this region a lot. It's hard. Let's ignore that one. Let's ignore it for now, since we're not set. Alright, let's go down to the 1 week time frame. I'll do the exact same thing. We'll identify our zones and any potential trend lines. And I can see a potential trend line here. Or maybe I should draw it from here. Maybe I should draw it from here. There's a trend line here. Let's call this our 1 week trend line. Let's call this our weekly trend line. We have a zone here. Let's make it thicker. This is also a weekly zone. Let's see, what else do we have? We seem to have a zone somewhere around here. Yeah, we have a zone here. But price has passed it through. But price is still showing respect. Price passes through it. Where's my mission? So price bounce above it here, then pass through it here. Then pass through it here, but then trace above it here. Then bounce above it here again. Then price passed through it again, but then came down again to reach test it. So it's a valid zone, but the zone is very weird. But at the same time, that's actually an attribute of Australian dollars, Canadian dollars. But like I said, it's a very choppy pair. Oh, I think I said that before I started recording this. Anyways, it's a very choppy pair. So I'm sure I can draw a trend line across these levels down on the daily time frame. But most probably, okay. So we can either have this trend line like this. We can either have this trend line like this, or we can draw a new trend line like this. Maybe another one work. Okay, I think I accidentally hit my change of. Okay, so we can draw a trend line like this. Let's delete this one. Should we delete it? First of all, let me hide this one. So this is what we have. We have a trend line like this. Price clearly bounced off this trend line twice. And then we can also draw another trend line here. So let's just keep them both actually, instead of deleting one of them. Both of them are valid daily trend line. Okay, so here we have a zone very clearly. Oh, here we have a zone, very clear daily zone. This is 1 pixel. This is our daily zone. So let's identify our trend origin, which is obviously here. Let's switch it to red because I like my trend origin box being a red box. So this is our trend origin. So let's now identify our market structure following after that. So we have impulsive, correctional, impulsive, correctional, impulsive. So price is currently on an impulsive move. So now we identify our swing highs and our swing lows. Most notably, we should focus on, because price is currently on an impulsive move, we should focus on our swing lows. We should focus on our swing highs and not the swing lows, because our swing lows are essentially the points where the lowest point that price reaches before switching to a impulsive move, while our swing highs are the highest point price reaches before switching to a correctional move. Okay, so since price is currently on an impulsive move, let's delete this. What we want to do is to check here and here and see if there's any specific price pattern that price prints out before switching from this, before the impulsive move ends, switches to a correctional move. So if we can identify a price pattern that appears, then we'll wait for that price pattern to appear here. So if we can spot that price pattern, then we'll know that the correctional move has, the impulsive move has ended and price is switching to a correctional. But even at that, taking correctional selling off of correctional moves is not my favorites to do. Why? Because you can already see price moves up. Hold on. Price comes up, down, up, down, up, down, up, down. So what is this? This is very clearly and very obviously a ranging correctional. Price was caught in a range between these points and these points to make a ranging correctional. So I do not want to be taking a trade-off of a ranging correctional. But still, let's go down and see what we have. It's actually still a bit of a ranging correction up here, but it's actually a triangle instead of. Anyways. So right here we can already see an M pattern, even without switching to this thing. But let's switch. Using the line chart, you can see it's clearly an M pattern here. So we have an M pattern here. We also have a slanted M like this. So we have an M pattern here. So we have an M pattern here. We also have So we have an M pattern here. We also have an M pattern as this one before price switches to what is clearly a downward trade. You can see impulsive correction, impulsive correction, impulsive correction, impulsive. The price switches into a downward trend. So now let's come here. And what do you see? Even without using a line chart, you can already see a very, very clear M pattern here. Switching to the line chart, you can see it's still just as clear. We have an M pattern here. And then we have the M pattern as this entire move here. It's a very big M pattern. But the problem is that price does not retrace following this M pattern. When we had this big M pattern here, you can see that price retraced you can see that price push downward after the appearance of this M pattern. But then here, there's nothing like that. And then a big M pattern form, but price does not retrace. Price just gets stuck in a range. So that means that even if price were to print, say, a tiny M pattern, okay, no. If price were to print a tiny M pattern here, then we should be taking a sell off of that tiny M pattern, off of this relatively small M pattern. But then the big M pattern, we should not bother trying to sell it because price might just end up in a range. So this is our expectation of current. This is our current expectation. Probably we should be taking it to here since there's a monthly zone here. What is a monthly zone here? Price might not even get. No, I should use to choose this monthly zone to project the price. Anyways, that's it for top bottom analysis on Australian dollar sky.